Hey guys, how's it going? And welcome to MasterMe's webinar series on financial freedom, mastering financial freedom. I've broken this webinar series into two sections, so make sure you catch the first and second part. Hope you enjoy it. It's a good introduction into investment, but also cryptocurrencies as a general. And I'll be putting out a few more videos potentially about passive income and other kinds of topics like that. So do let me know what you guys are interested in learning more about in terms of reaching and maintaining a financial security and financial freedom in your life. I've introduced these videos to be extra content outside of the course content that we usually cover in MasterMe as a way to provide additional value to my existing clients, but also to start showing other people the kind of things that we're covering as well. So I hope you enjoy, and if you ever have any questions, hit me up or ask me for direct topics that we can cover in the future, and I'll be happy to research those further and find out the answers for you. All right, enjoy the video. So, welcome to MasterMe's webinar series. I am Bede Eagle, founder of the MasterMe course. I've got a BA in psychology and a BCA in human resources and marketing, 15 years in social impact and not-for-profit sector, and experience in men's behavior change, and a passion for personal transformation that I've sort of studied and done various programs and meditation courses and all that sort of stuff over the years. It's led me to be very interested in what I do with MasterMe and have turned that into a program. And I've also been an investor in cryptocurrencies since 2017 and been heavily involved in that time and researching a lot of things. So that's where I feel like there's some crossover and a chance to explain to people a bit about what that world is, because it's becoming more and more prevalent. The MasterMe program was founded in 2018, and I typically help people who are frustrated with their current work situation and who want to move forward faster to a richer life. And when I say richer, I mean a life that's more fulfilled in the heart, contributing their best self to the world, building more wealth than ever, living a great lifestyle and financial freedom, healthy mindset and perspective of abundance and gratitude towards what they have, a sense of place and purpose in the world, momentum towards their ideas and goals and dreams. It's an 8-week program, and I help all kinds of people, entrepreneurs, teachers, graphic designers. Alex has done the program, he's here with me today, and helps them uncover kind of what their highest contribution to the world would be. It's particularly suited for those who feel undervalued or feel like they want to contribute more of their skills to the world, or want to reignite or refocus on their passion. Today's seminar relates to financial education because I often hear people saying that they could never own a house, or it's out of their reach, or investing is confusing. They don't know where to start for investing because it wasn't taught in school quite often, and there's a lot of frustration and anger that there's such a lack of awareness around the ways that you can actually build some security in your life. And my thesis for the webinar today is pretty much you need to be a little bit smarter these days, not get left behind, it seems. But financial freedom is a possibility, and we need to understand the context that we're in. And so that's what I'll be explaining a bit today. This is intended as an introduction to some financial information to fast track your own financial empowerment. And as I've said, it sits with MasterMe in that sort of way. So here we go into the actual content. Disclaimer, I'm not a financial advisor, of course. It's not something that I've studied. This is intended to be something that will initially build some awareness around things like cryptocurrencies, investing, and is provided as information rather than advice on what you should do. And I recommend you contacting a financial advisor if you're looking for specific information that suits to your specific needs. So what I'm going to cover today is sort of the big picture that I'm seeing and have been listening and learning a lot about, and the macro perspective, building wealth. What is money? Bitcoin, is it a scam, or maybe is it a life raft? Other coins outside of that with Bitcoin. Is it too late to buy cryptocurrency? First principles of investing that I've been taking on, and there's a lot more to that than what I'll show today, but this is sort of an introduction, and MasterMe principles that relate to investing, and some tips for crypto investment. A chance to have some Q&As, discuss any questions you've got, see if I can help you with buying that sort of thing. I know I've spoken to Mickey about NFTs, which are absolutely massive right now, and how that relates to your own artwork. So this will hopefully give you a good grounding in what cryptocurrencies are, and then where we're kind of at this point, and give you a bit of a chance to
understand what you'd personally like to do with it and what you might like to learn more about. And I also have 2 giveaways as well. The macro perspective today is that we're kind of in the age of money printing. It's what people have been fearing for a long time. As you can see on the graph there, you've got, and the black line is the amount of money that has been printed over the last 15 or so years. And you can see the massive uptick that has occurred in the last year. Approximately 20% of all money, this is US money, the USD, in circulation was printed last year. And that sort of approach is called quantitative easing, and it's something that central banks have been doing to try and keep the economy alive. And obviously with COVID, it kind of kicked it into a whole nother world, whole nother level. Obviously when you have, I think most people understand supply and demand, when you have massive amount of supply coming in, you obviously the demand goes down, or at least the price goes down alongside that. And so it's devaluing the dollar. And part of quantitative easing is that they create money and then buy back things that there's such things as bonds, which is basically government debt. And they, if you were to buy that, they would give you an interest rate, but they're buying those back, and they're actually on a rampage in a way. They're buying back stocks and property and many kinds of things. So a huge amount of stocks, property, and bond were actually owned by the Federal Reserve, the central bank. And so you're seeing a lot of disproportion of what is actually valuable. And so we're getting some really odd things going on there. With companies that probably should have gone under are getting massively high valuations on the stock market, and everything's kind of a bit weird right now because no one really quite knows what value is. And for a long time, there's been a phrase, cash is king. But at this point, it's because there's so much money in supply, and this is occurring in Australia as well. Like I think it was around $30 billion was printed in Australia last year. This is something that is quite a concern, because the money that you have just sitting in the bank is now not really, it's losing value every day because of this kind of inflation that's occurring. How do we build wealth in this day and age? It's the old school approach, like probably my mom and dad was like, you buy a house and you can save cash, and that used to be kind of enough. But in this day and age, it's not really enough anymore. If you were to save your money and put it aside, as I said, you're losing value on that. And this is a very powerful effect in the world when also combined with that, we've got things like negative interest rates, which you're used to getting your cash sitting in a bank earning some interest on it. We're seeing that get lower and lower, as you'll probably have noticed in each of your own bank accounts. There's less and less like appeal to just having your cash sitting there. And in some countries, we're seeing that interest rate go even lower. So it's actually costing you to have money in the bank. Into negative interest rates. So this is a massive motivation for big companies that have massive amounts of cash reserves. They're freaking out because they're literally having millions and millions, billions of dollars of cash sitting there that's just evaporating. And even some companies, they're actually valued, when they're sort of valued for their potential on the stock market, they're actually getting points off because they have cash reserves. And so they're actually saying that this is not a good thing. And so what does that mean for us as individuals? It means that we kind of need to take it back to a different strategy. We need to think of how do we, to get ahead, we need to think about how do we earn more, whether that's increasing our income, because if you're not earning more, then effectively you're earning less each year. So you've got to try and work out how to adjust your income or find more income. And then second to that is the strategy is how are you going to protect your money? Are you going to store it in property, gold, or potentially Bitcoin? or stocks that are good quality businesses that grow alongside that inflation and that absorb it or pay dividends. So that's sort of the thinking that is now required. What is money? I'm going to just show a quick clip. For some of you, this might be obvious, but this is quite important sort of background information as to what money is.
Promise.
Can you guys hear that?
Worthwhile, and it has a key point in there. First, we lived in a gift or a debt economy. I help you now, then you help me later. However, then we need to know each other. Number two, then we figured out how to do exchange with strangers. I have a lot of flints and you have a lot of pots. Then we can exchange some and both of us win. However, then our wants need to coincide. If I want shoes, not pots, then we also need to find a shoemaker at that exact moment of time who also wants pots. So I can give my flints to you, you give your pots to the shoemaker gives the shoes to me. This gets very complicated very quickly, and there is no evidence that barter has ever been the dominant ways of exchange. So then we figured out money, that we can all exchange to something of reliable reuse and utility, like livestock or grain. An improvement, but big quantities of grain can be difficult both to transport and to store. It molds over the winter. Coins. Then we figured out that we can swap to something else valuable that's easier to carry and store, like a gold coin. But even that is heavy if it's a lot. Gold notes. Then we figured out why not leave the gold coins at one central place, like a gold bank. And then we get a note instead, which is redeemable to that gold. And then we can just exchange those pieces of paper notes instead. Of course, Asia was the first to figure this out. And of course, first in the West was Sweden in 1661. With mixed success can be added. Then we really cracked it. Why not skip the gold altogether? We just issue those pieces of paper, which has no value in itself, but it has value because the different parties to the exchange all agree it has value, usually because the government says it has.
To suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
That's the fiat currency. US adopted that system in 1971. And of course, we digitized the money. Instead of carrying a briefcase of physical banknotes like in the movies, if I want to send money to you, we just wire them digitally from my bank to your bank without any actual notes moving. Now, the fiat is a very loose concept, since you can basically print as much as you like. And as Germany showed in the 1940s and many other countries, this system can collapse. And now in 2020, the US is creating more money. Here it starts getting complicated. Some feel that is irresponsible. When Bitcoin was invented in 2008-2009, it was a response to that. The famous first Genesis block of the Bitcoin blockchain, the Times 3rd January 2009, Chancellor on brink of second bailout for banks. Bitcoin made 3 promises. One, that it wouldn't be possible to arbitrarily just print more of them outside of the given system. Number 2, it would remove the need for this irresponsible banking system entirely and make monetary transactions peer-to-peer directly from the sender to the receiver. Third, it becomes very efficient. The bank system needs a million offices with people in them in every street corner of the world, while Bitcoin can do the same thing with a few.
Okay, so that's just a little overview of like the history of money and how we've come through, and again, recapping that, this printing of money is literally just somebody typing in numbers into a machine and it just spits out the money. The other definition important is to understand the definition of money. And I know, Mark, you've seen the Mike Maloney's Hidden Secrets of Money. It's something I'll put in a link at the end, but understanding what currency is. And we're kind of at this interesting point right now. I'll let him show you the difference between currency versus actual money.
A unit of account. It is portable, durable, divisible, and something called fungible. Fungible means that each unit is the same as the next unit. $1 in my pocket buys the same amount as $1 in your pocket. Money is all of those things plus a store of value over a long period of time.
Okay, so that's Mike Maloney's definition of money versus currency. And he's traditionally been a big gold advocate, and he's got a business selling gold. And there's been this question as to whether Bitcoin is actually a store of value or not. But, and you know, for a long time it was referred to Bitcoin as currency, but Wall Street is increasingly calling it a store of value. Wall Street and big institutions that are deeply concerned about this money printing are increasingly thinking of Bitcoin as a store of value, which would put it more in the class of money, because it is truly scarce. Over the course of 5,000 years, there's been many types of fiat currencies, and they've all typically gone to zero, because they usually end in this very hyperinflation mode where basically all the value goes out of it. So potentially we're heading towards some sort of a crisis like this, and Bitcoin could potentially be something of a life raft that would help us through that. Okay, so as referred to, we're starting to see Bitcoin referred to as digital gold. And how did this come about? So it was, as the video said, it was in response to the 2008 crisis, where we had this global financial crisis, and it was at the result of irresponsibility. And so this Satoshi Nakamoto, who wrote this Bitcoin paper and designed Bitcoin, put forward this idea that to find a way around this so that it would be decentralized, because when the power resides with one organization, it's vulnerable to misuse. And so blockchain, the way I see it is that it's a ledger that is not held by one person, but held by many people around the world. And so when we're accounting, for example, if you were to say that you had $100 and I said I have $100, how do we know that? It would be better to have a third party that has the same ledger that's gone between us two. And when you times that out by thousands of people around the world, and you get a system that is actually trustless, you don't need to require myself to prove it, because it's verified. And so what this blockchain does is that, or any blockchain does, is if I'm sending you money, then or any sort of token, all of the nodes on the network record that at the same time. And so you basically have this growing list of transactions that have occurred across the entire planet. And so that allows us to be a lot more sure it can't be tampered with. And there's many things that go into this. And the way that all these transactions are processed is by miners. And they will get a reward for doing that thing. And that's where they get a reward, and that is the minting of new Bitcoins in the case of Bitcoin. And that's how Bitcoin is created. And there's a cap on how much Bitcoin can ever be created, 21 million. And so there's a scarcity that is there, and that will slowly be eked out over the next 100 years or so. There's benefit in this as well, because you can have in relation to art and many different things like trust and transparency, because there's a public ledger. So it's although it's been criticized as being a method for criminals and the dark web sort of thing, it's actually a dream for the FBI, because they can actually track transactions easier than ever. And so there's also other benefits into the art market as well, with there's a thing called provenance in the art world, where you actually need to prove where and who has owned it to reduce fraud. And by putting these kinds of things onto the blockchain, you can have this ledger of ownership that is immutable, and also it allows you to create secondary markets to prove where it's been. And so the art world is rapidly taking that on, and I'll explain a bit more about that later. I'll just recap, like you can see in this the little graph here, this is roughly where we're going. This tiny little bubble here was a peak in 2017. It was a huge deal and caused a lot of interest, but as you can see, we've actually gone much further now, and we're just basically taking off. Does it look like a bubble? Potentially, but what we're actually seeing is this is moved from being monopoly money into a real institutional adoption across Wall Street, hedge funds, massive corporations taking on. We've probably all heard Tesla bought Bitcoin. PayPal is now offering the purchase of Bitcoin into all of America now, recently into the UK. And many other companies are starting to buy this as an actual hedge against the inflation that they're so concerned about. 1 to 5% of their portfolio. Others are taking on much more. But it seems that Bitcoin has become legitimized as a store of value against the coming inflation. Admittedly, it is highly volatile at this point, but it is still it's a relatively small market, so that's kind of expected. Are there any questions at this point about what is Bitcoin, or any specific questions anyone has? Oh, could you are you unmute, Julie? Are you talking?
I've heard that mining Bitcoin takes an awful lot of electricity, and at the moment it's something like this, enough to power Venezuela or something. Do you see that, or is that coming to a peak? Or
I've got 2 slides on that, so I'll cover that in just a
minute.
minute.
Excellent. Okay.
That's a very common question that people are concerned about. Yeah. Okay. Here's Georgie.
Sorry, B.
Yes.
Are you going to explain a little bit about what mining? I'm a bit confused as to what mining is.
Sure. So it's probably it's definitely too complex to be explained in this chat here. I can definitely send you more links to explain it. You can understand it better when you actually dive into Satoshi's paper, the white paper that he originally put out. It's actually really good. It's a bit complex, but it's really good. And I've got some links there explained. Actually, I've got I'll see if I can go to this page. There's an image that I've got that I had ready here. So yeah. Typically,
and from what I understand, it's like the miners are mining for Bitcoin. Is that? Yeah,
they're basically rewarded for the processing of transactions. Okay, so they have to, and it's bundled into sort of these blocks. That's why it's called a blockchain. So it's a block that they bundle these transactions into, and then it gets put onto the blockchain, and then all the nodes from around the world download that block. So it's like creating this ongoing ledger of all transactions that have ever occurred. And the way they do that is called a proof of work. And so in order to actually do the transaction, they have to solve a really difficult, a very simple but time-intensive equation. It's basically guessing random numbers, and it's a long string of numbers, and they have to do that. So they have these computers do very simple work, but it just takes a lot of time. And so that's why it's a proof of work. So when they crack this random set of numbers, that is the that enables them to put on the transaction onto the block, and then in reward for that, they get some amount of Bitcoin. Okay, and that's how they mine Bitcoin. That's how Bitcoin is brought into existence, and then they just keep going like that. And that's where the power comes in, because it takes the, it used to be you could do it on a little laptop, but now it's like warehouses of miners that are just like have these units just burning all day, just like to processing transactions to farm or to mine Bitcoin. Does that answer your question a bit?
Yeah, absolutely. So it's kind of like full-time. It's like a full-time job, like a stockbroker or something.
Yeah, well, it's more like, you think more like a factory, because it's like you've got these giant warehouses, and it's just one or a team of people just making sure everything's nice and cool. Like often do it in like cooler climates like Iceland and things like that, because it actually heats up so much that they actually need to keep it cool. And so yeah, that's the sort of powerhouse of the Bitcoin, and it is a little bit, there's many different organizations, but it is probably, that would be one of my concerns, is the centralization of those mining facilities, because that's obviously they're quite powerful in a way. They can they're bringing a lot of coins into existence, and so yeah, that's kind of one of the concerns that you might have, but it is still highly distributed, and the nodes that actually run all the transactions are distributed across the planet as well. So it's very complex, but I recommend reading up about it if you're interested to understand the nuances of it all. Obviously after Bitcoin, there came the next iteration of coins. And one of the sort of first movers was Ethereum, and that actually brought in more than just a coin that can be transacted. There's actually now what they're calling smart contracts, which is sort of, you know, in a very basic terms, like, I promise to give you this money when you have given this to me, and it's like a contract, but it's what they call a smart contract because it's actually verified by a decentralized blockchain. Okay, so this allows very complex things to possibly occur, and you know, the start of the Internet of Things, where you know, I want my car to turn on, or I want to give you access to my Airbnb at this point in time through my electronic key card. You can kind of start to power the Internet of Things with these contracts via the blockchain. And it's, again, a very complex thing to try and explain in at this time. But from Ethereum, there came many more other coins, some focusing on privacy, some focusing on speed of transactions, some focusing on other similar protocols to Ethereum, loans. And what we've seen in the last year is just decentralized finance, so like borrowing, loaning, you know, basically all the tools of the stock market being turned into a crypto world. And then one of the other breakthroughs was stable coins, and we've already talked about how gold, our paper money used to be linked to the gold until that came off that standard. Well, now we're seeing stable coins that are linked to fiat money, which gives a stability to the crypto market. So there's many stable coins now as well, such as Tether or USDC, that enable you to have some degree of moving out of that volatility if you were to be trading amongst those sorts of things. This year, we've also seen decentralized exchanges, which are where, you know, typically if you were to go and buy Bitcoin, it would be a centralized exchange. Now we're seeing these direct peer-to-peer exchanges with the ability to switch coins between those sorts of things. So we're seeing increasingly a decentralized world, and a decentralized approach, and this is all often open source, and it's kind of verified and audited often by professional auditors to sort of make sure that there's no sort of dodgy code in the background and things like that. But it is very much a new space in a lot of ways, so you do need to be wary if you're entering into it. NFTs is something I've been talking to, or trying to get Mickey to see as well, is basically art moving into the crypto space. You see this image here of this astronaut pointing at a flower. That image sold for amongst in a catalog of others, sold for $65 million a few weeks ago, and we're seeing massive money buying up you know, digital property in some of these coin offerings. And this NFT space is definitely in a bubble compared to what I think some of the more financial sort of tools of Bitcoin is. So I expect that to probably like come up and come down a bit in a while. For example, this tweet here from the founder of Twitter. It's his first ever tweet that's currently getting bid on, and it's up to $2.5 million for that as an image. And of course, you can cut and paste it, and you're like, well, why would I put money on something I could just cut and paste? But you've got to look at the sort of underlying thing. It's there's arts about ownership, and you can verify on the blockchain that you own this image. And you know, when we start to see digital galleries turn up, you know, you've got people with you know, I'm seeing more like frames that actually have digital images on them, and you know, like your TV screens are actually like art installations. And so we're starting to see the ownership of digital art as being maybe something that's valuable. But it's easy to probably underestimate or overestimate the what it is now. We tend to, like, people get in a bubble, but probably the underlying technology will be around for a long time. And you know, there's 6,000 plus other coins on the exchanges, and most of them, 99% of them, are just absolute rubbish. They've taken the code from other coins, open source stuff, and just given it a new facelift, and you know, packaging it as the next big thing. So you definitely need to be wary on that sort of a front. Do you have any questions? That's a lot. I know that's a lot in there, and it's not really the best explanation at this point, but there's just so much variation and information there. Does anyone have any specific questions about different types of cryptocurrencies?
Yes, I do.
Yeah.
What's I've heard about Ripple being something that's going to be bulling soon, or is. What's your what are your thoughts on that, Bede?
I'm no expert on Ripple. I do know of it. It's as far as I understood, it was quite a centralized coin that was started by the banks, and so some people who are like sort of more of the original pioneers and you know, sort of libertarian sort of values of Bitcoin, which is about, you know, equality, the decentralization, are less impressed by that. I have seen some investigations around Ripple, so I don't know if that's I haven't invested in it, but I don't know. It's something to do research on, man. And yeah, everyone's got a thesis on the next coin that's going to go up to the moon. But yeah, it's I'll get into sort of my values around, or my approach to these sorts of things in a bit. Coming back to Julie's question about energy, it does use these minings. It does use a lot of energy. You know, some at this point, like as much as the country of Argentina. But what's not so mentioned is that the current financial system might use 3 times as much. You know, quite often people focus on these things, are trying to create what they call FUD, fear, uncertainty, and doubt, to either put a slide against it, or they are perhaps even looking to get into the market themselves, but the price is going up, so they'll come out with sort of slander against Bitcoin quite often. There's an image there that US Christmas lights use as much energy as entire countries. It depends on, like, what I've heard someone say, compared to hair dryers using huge amounts of energy across the planet. It's like whatever you measure it, saying, does it have utility? Who's to say what is a good use of energy? And Bitcoin will be getting upgrades that will make it more efficient in the future. There's ways that they can batch more transactions together, and renewable energy for mining is a trend that is increasing. We're seeing, I've seen a few different estimates, but a research that's come out recently through Dutch Bank estimated as high as 78% is already renewable energy that powers cryptocurrency. And some others said, you know, in 2018 it was 28% was renewable energy, and it had risen by 11% within just 2 years. And this is a trend that is 100% increasing. And you know, this has only been around for 10 years or so. So it's already, if it's at 50% or more, then that's quite impressive, I think. And some are saying that it's actually going to be a really strong driver of adoption for renewable energy in the first place. So some cool things there. I've also heard about it's actually reducing the waste of energy. There's increasingly mining stations are being built next to like hydro dams or natural gas, and where there's they have to basically let this extra energy just be used up. Or just go down the waterfall, or these natural gas flares and stuff. But they're actually, because they're there with the mining, they're actually able to capture that excess energy and use that for the grid. And there's some that are actually being mined, mining Bitcoin without any cost. Also, there's a really cool project, and there's a number of projects that are trying to decentralize energy. So imagine if I was able to trade energy directly to you. I have my own solar panels that I've got a battery, and I have all this excess energy because I don't use it all, so I can put it onto a microgrid and trade it to you. And there's one in Australia called Power Ledger, and there's a really one that's possibly related to Tesla, that's Energy Web Token. And these guys are actually driving better use of energy and helping us to actually make the renewable energy market more efficient. So it's kind of like it's coming, and I think that it's not a long time before we're going to see this as 100% renewable, and yeah, not an issue anymore. And also things like storing of value, like compared to gold. I've seen one statistic is it puts it about maybe 2 or 2.5 times the energy of Bitcoin is to produce gold. And obviously you have to dig up huge amounts of land to produce gold, which is traditionally been our store of value. So there's an argument that this is actually still way more efficient than what we're currently doing, even though it seems like a lot when you say it's using the entire country usage of Argentina or Chile or something like that. If you want to see more, you can check out Dan Held on Twitter. He does a lot of stuff about this. He's got a Twitter stream that he's done about renewable energy and crypto. So the big question is, are you too late to buy Bitcoin? It's already at 70,000, 74,000 Australian dollars right now. Short answer is absolutely not. And not just I am a massive bull on crypto, but it's there is now becoming, as we've already talked about, that hedge against inflation, that store of value. It's now actually getting to a size that actually means that the risk to reward is reducing, because you've if you were to buy now, and it's not to say that I wouldn't buy now myself, but if in buying now you might feel like you've missed that earlier massive price increase, but actually what you're getting is a legitimate market, which is it's above $1 trillion now for the Bitcoin market. And it's only at that sort of size that some of the institutions can actually look at this kind of thing as a market and go, okay, this is actually big enough now. This is a legitimate asset that we can actually look at and buy it. So in a way, it's becoming more secure and more legitimate as a place to put your money. As a definite, as we've talked about, some of the altcoins are mostly rubbish. The crypto market is still 90% speculative, or probably more. A lot of the projects are promises and projects that will get value in time, but it's kind of like, the way I look at it is like everyone on the planet is now able to be a angel investor in Silicon Valley. Like, you can go and look at these companies, see if you think you like what they're doing. Do you like the CEO? Do you like the team? Do you feel like you trust it? Does it make a promise that makes sense to you? And you can buy the tokens earlier on and be a part of that rise as they move up. But it is mostly speculative. It's when we talk about assets being a producer of income, or dividends and things like that, these are what you're hoping is that these are actually going to go up in value, just like stock, rather than something that's like producing a dividend. There's a huge range of price predictions. I won't go into all that now, but essentially, when I've talked about the mining and the rewards they get for doing the transactions, the reward actually halves every so often number of thousands, millions of transactions, which roughly occurs every about 3.5 years. So every 3.5 years, roughly, the reward or the amount of Bitcoin that's being produced in the world is reduced by half. And this has a very predictable kind of pattern to it. I will just quickly show you the stock to flow model. This graph here, you can see it's actually it's probably not the best graph, but it's every 4 years you get these peaks that come up like this, and we're right in sort of another one right now that is expected to go for another year or so, and so you can kind of expect these things to kind of move forward, because when the rewards halve, the scarcity increases, which is one of the most primary value that Bitcoin has. And so you can expect this sort of, it's kind of like a few months after the halving occurs, there's this run up in price. And so predictions like, are you too late? Like it's currently at 74 or 5,000 Australian dollars. There's predictions for it to go up to like 100. Easily it's going to hit 100 this year. But longer term, like as we see these money moving in, if it was to even take some of the market value out of gold, which is a $10 trillion market cap, and it's currently at $1 trillion market cap, like you can start to see this. A lot of people are predicting more like $500,000 for one Bitcoin, up to $1 million in the next sort of 10 years or so. It's not out of the realm of possibility, even though it seems far-fetched. But if you crunch the numbers, that's kind of where it starts to look like. So, if you're looking to buy Bitcoin and you're wondering like why, like maybe there's some other things going on, like, risky, is it not real money? It's not, if you've heard these sort of things like environmental costs, maybe it's too hard to buy, to procrastination and things like that. I'm not saying you should buy it, but it's like, you can buy just $50 worth of Bitcoin. It doesn't have to be a whole Bitcoin at once. And so it's not too late, and it's something you might want to consider as part of your portfolio of investments. And again, this isn't financial advice for your particular situation. This is just information.
All right, well done on getting through the first half of the webinar series on mastering financial freedom. The first half obviously covers a bit about the context of the financial system and Bitcoin itself. If that was a little bit overwhelming, don't stress. I've got an amazing resource that I will email to you for free. Just let me know, DM me, and I'll forward that on to you. It's got a massive resource of all the topics and expert sources that I've used to school myself up, and it's made a massive difference. Stick around for the next half, where we talk a little bit more generally about investing itself and the MasterMe principles for success and how that relates to investing. And at the very end, I've got a giveaway for anyone who watches to the end, a $500 value gift. If you'd like to check that out, please do, and I'll see you at the other side of this video.
The best investment you can make is spending time and building your own financial education. Understanding, like I've just tried to give you a 101 of the context that we're in, and some of the tools that you might want to use. The best tip is to get your finances in order first. So get out of debt if you can, crush debt, create your individual savings buckets. And if you want more information on that, I recommend checking out The Barefoot Investor. Scott Pape does a really good book on that, which helps you understand how to partition out your income, and you can start to live with a lot more confidence rather than just one account. Get clear on what the definition of assets are. I've talked about that a little bit. Obviously, Rich Dad, Poor Dad is a famous book by Robert Kiyosaki, which kind of inverted what assets are. If you're going into investing, understand the psychology. Like often there's with stock markets, and certainly things with cryptocurrency, is that there's a technical and fundamental analysis which you might do, but so much of it is herd mentality, sociology, and psychology. And you constantly at that feeling of like, when it's up, it's too high, and when then when it dips, you're like, oh, it's going down to the bottom, it's going to zero, and you've got to kind of have a bit of fortitude and be a bit contrarian. Try to resist going in at the top and being patient for it to come down. there's a mindfulness that comes alongside investing, I think, where it's having that patience to breathe, take a step back, and just sort of resist the emotion, because it is emotional when you start putting money in things. And yeah, so the other thing that I think is really important is to be really clear on your goals and your life vision and where you're trying to get to, because that will help you put into context what you're able to save, what you're actually able to invest in, and where do you want to be in 10 years? How do you want to retire? Are you working on passive income? Are you trying to maybe a better investment is into your new startup, which could be actually generating income for you? So maybe there's like being clear on where you actually want to get to, what's the most important thing that might be more important. And I think so important is the relationship to money that holds a lot of people back. So many people feel guilty at the idea of having too much money. So many people build up a certain amount of money and then they blow it away. And it's like this sense of boom and bust that a lot of people have, and it actually comes from a better mindset to wealth. Money's not a bad thing. It actually gives you empowerment, and it enables you to do more good in the world, and you can be a good steward of that money. You can choose to put that into positive things. You can choose to move your super into a social impact realm. You can do these sorts of things. It doesn't necessarily have to be a bad thing. And we do a lot of mindset, as Alex will know from the MasterMe course. We do build on mindset. A few out of the MasterMe course, I've got some success principles for transformation, but these also, I'm just going to select a few. These also relate to the sort of investment side as well. So, I mean, one of the principles is in the MasterMe course is that, you are responsible for your life. And that relates to your income and your financial situation as well. No one's really trying to hold you down. Like the system and stuff might be like moving in crazy ways, but no one's trying to hold you back. So, the less you can make excuses, the more you can just take the reins and control what you can control. You're going to move forward. Principle 2, that change starts with your thoughts, and perception is reality. So much of what you need to change often is actually the way you think about things. And maybe it's like these limiting beliefs or things that cognitive inflexibility. Maybe you actually want to move forward, but there's these beliefs that are holding you back. So we need to start analyzing what's actually in the way there. Another principle 5 is that we can design who we are. So if you feel like you're in a place where you're potentially not in a great position financially, it's just a matter of changing your mindset and actually realizing who you want to become, and then starting to move towards that. We get really clear in the sort of course that I hold with MasterMe. And so much of this is about realizing that we can change, that we can grow, and embracing that, and becoming wealthier in a state of mind, but then also growing into this place where we maybe thought in our current state today, maybe we think it's impossible, but we can actually move forward and go for it. Principle 8, the power of compounding effort. This obviously relates to finances, of course. Probably most aware of this already. If you are getting interest on something and then you're constantly also saving, the compounding interest and savings starts to look over a period of time, starts to look like exponential growth. And the same is true for putting effort towards something that you're passionate about, your personal project. At first, it feels like it's just a few coins stacking. I'm not talking about money. I'm not just talking about money. I'm talking about like things that you actually want to do in your life. At first, it feels like just small amounts of impact are occurring, but over time, it starts to amplify, and the same amount of work is actually generating more and more results. That with a network effect of things, you're making bigger splashes with the same amount of work, and eventually it starts to really demonstrate a huge amount of power. So that's something to be mindful of, is when you're putting energy into something, don't lose hope, keep going, and remember that the rewards will probably start to amplify if you're focused and dedicated and working in the right direction. And that's something we cover in the course a lot as well. And of course, that relates to financial wealth as well. True growth doesn't go in a straight line, and this is so apt for the cryptocurrency market. You'll feel sometimes if you do want to buy into crypto or just Bitcoin, that there'll be that volatility. And that's kind of that some are saying, you know, the price of performance is volatility in this market, where it's like, it is a growth industry. It is something that's just coming up, but you'll get this sort of wavy lines. And it's the same with anything you do. Like it feels that sometimes you're not going anywhere, maybe you're going backwards, but actually if you just keep focused on your goals and keep moving forward and just doing what you can to get it, you'll find there's a regression to the mean. And even though you might be having a low point, at some point you're going to come back up and see the high tide as well. Just lastly, I wanted to finish on a few points. Crypto investing, some people are saying, you know, like 1 to 5% of your portfolio is a good number. And it's just sort of a hedge against that inflation that we've talked about. If you might want to consider your age to risk ratio, which is if you're a bit younger, you might be more willing to take on a bit more risk. That's up for you to decide. I won't go into how to buy crypto, run out of time, but I would recommend, you know, start small. You don't have to buy a whole Bitcoin at once. If you did want to buy one, you can buy, as I said, like for $50, you can buy one. You can buy some, and it's actually a very smart way to do it. It's what they call, you know, dollar cost averaging, which is like you just buy a bit every month or every week or whatever based on your income. Just buy $50 every week or something like that. If it's up, that's going to be high. If it comes down, then you're going to get the benefit of that. But over time, you're going to get that regression to the mean, which is a good way to do it. Otherwise, you can just wait for the dips and have the cash on the side. And because we are going to see a lot more like ups and downs as that goes on for the next, you know, couple of years, probably 4 years, we're going to see like big high numbers, and we're also going to see, you know, surprisingly large drops, you know, like 20 or 30% dips. Then it'll freak everyone out, especially when you're just buying it. But like these are predictable, so just have that thick skin. Consider taking profits when it's up. If you've made a life-changing amount of money, then, you know, take some profits out, and you know, maybe put that into the stock market or some, you know, you can move these profits around, because a lot of people are finding that they're getting just massive gains and they just sit on them. And then, like I've mentioned with the NFT market, like there's some coins that are just so high up, you know, like talking like 7,000% up. And people just, you know, think, oh, now it's going to the moon, and you get sort of attached to these coins, but then they crash, and then you've actually not realized any profits at all. So taking profits as you go is a really wise idea, just as you dollar cost average in, dollar cost average out as well. So maybe if it's doing really well, start to take some out. And be wary that every time you trade a coin for another coin, that is a taxable event in Australia, and mostly around the world as well. So if I was to buy a Bitcoin, it goes up by 100%, and then I sell that, then I am incurring a capital gains event. If it's longer than a year, then you do get a discount on that in Australia, but you need to, I'm not sure about New Zealand. Even if you are doing things like, because I've mentioned some decentralized exchanges where you might want to change some Ethereum for some other coin or something like this, every time you're changing to another coin, the tax department sees that as you changing from this coin to Australian dollars back into the new coin. So that's, again, it's a taxable event every time. So just be wary when you've got these things, it starts to feel like you can sort of trade them around willy-nilly, but there are implications. So it's this little heads up there. I don't have time to go into storage today, but the way you store can obviously be exchanges, desktop browsers, or cold storage, which is like a USB. If you want to know more about that, I will explain that to you in person. I won't go into the apps either, but there is some information I'll give you guys if you are really interested in this and like getting more information. Also, scammers, it's always important to know that like no one will ever contact you with good intentions about giving out your private numbers or anything like that, or tell us your passphrase or your things like this. No one will ever do that doesn't have nefarious intentions. So never give out your keys. Always be wary that if it sounds too good to be true, it isn't true. And there's a lot of it going on right now, so you just be mindful of that. In conclusion, so the world is going through a massive change, and this is the adoption of once in a generation technology. It does, as we've seen that graph, it does look like a bubble, but I actually believe that it isn't. It's actually a rapid and inevitable adoption of digital money. And the implications for this are just the tip of the iceberg. This is a shift that is occurring, and it will probably come down a bit and stuff, but regardless of the stock price, the technology is moving forward in a very fascinating and incredible way that I encourage you to dive into and like explore what these things mean and try and understand a little bit, because it's kind of a matter of time before these things start to play out. This is kind of like the internet 3.0 as they're calling it. It's not too late to get a part of it, to either protect your wealth or potentially even make some excellent gains if you want to. But you know, it's not crazy, it's not a scam, it's not unsafe unless you're unsafe yourself. So do your own research, be cautious, and be safe. Make sure you're clear and focused on what you actually want to do with your life and where you're trying to get to, and so that can give you some better context with where you're trying to get to. I have a value pack on top of this webinar to anyone who's interested. There's some extra information about crypto, some of the resources for understanding financial worlds. I've got links to those videos I showed. There's a whole series around money and what that is, and that gives you a much deeper understanding of what I've covered today. I've got links to tax agents if you want those to understand that better, how to earn interest on your crypto. That's something, earning passive interest, passive income off your crypto is definitely possible these days. You won't find the kinds of interest rates in a bank. You know, with one service I'm using, I'm getting 6% interest. And you know, that's pretty great. That's like passive income. Storage options, I can give you some more information about how to store your crypto safely, or if you want more support and actually like how do I buy my first crypto, and some of my other favorite sources for finding hot picks for new coins. So if you're interested in like finding the next hidden gem, that's a good place to start. So if you're interested in that, private message me or DM me or send me an email, and I'll be more than happy to share that with you. All right, well done on sticking around to the very end of the webinar. I hope that was a really useful chat for you. As promised, I am offering everyone who's stick around to the end a $500 gift, which is a one-on-one free consultation with me. So if you're looking for more clarity in your life, if you're frustrated with your current work situation or your career, if you're frustrated with where you're at in life with your finances and you want to become truly rich, as we've talked about, or you want to move faster towards your dreams, set up a meeting with me with the link below and we will chat, and I'll give you an hour of my time for free to see if I can help you and give you some direction. And I'll tell you a little bit about what I do in the MasterMe course, and we'll take it from there if you're interested in hearing more. All the best. Good luck.